Hey everybody, welcome to the channel. So today we're going to be looking at Toll Brothers, a home builder, more on the luxury side. So this is a stock that I have owned. So first we'll look at my purchase prices, then we'll move into evaluating the stock, and at the end we'll go into the machine learning to forecast the stock price 52 weeks into the future. So let's jump into it. You can see I bought into this stock twice, both back in April of 2022 at a price just under $47. And since then, this stock has had a nice run, increasing almost 80%. And if I would have purchased the S&P ETF, that gain is just under 1%. So Toll Brothers and really all home builders have seen a nice bull run during this time period. And taking into account dividends, which really isn't that high for Toll Brothers, looking just over 81%, while the S&P ETF would have given me 2.6%. Down here, you can actually see my investment. So it wasn't a large portion of my account. Looks like a initial investment was just under 7 grand, and with that gain, looking just over 12. So has performed very well during this time period. So let's jump into the valuation to see what we where we stand now and what the outlook is. Looking at Toll Brothers financial data for the past 10 years, and right away I can see this is a nice, steadily growing company. Not too many red cells, which would indicate to me a down year compared to the prior year. And also dividends. Since they've been paying dividends in 2017, it's been steadily growing. I'd really like to see that. Share count. Okay, 2014, it slightly had an uptick, but since then, declining every year. So nearly 10 years of declines. These two right here is what I like to see. Okay, free cash flow, a little mixed there, but still the dividends, shares, net income revenue, I think that offsets a couple years of a decline in free cash flow. One thing though, return on equity, I would like to see this higher. Yeah, 22% or just above it last year, though I think the industry average for home builders is closer to the 30%. So I would like to see that a little higher, but overall, these are nice numbers. Let's go down a little bit, look at it on a graph here. So some of those key data points we just looked at above, I want to see those going up and to the right. And pretty much that's what we're seeing. Revenue per share, earnings per share, book value, dividends up and to the right. Return on equity, like I mentioned, I like to see that a little higher for Toll Brothers, at least closer to the average of 30, but at least here I can see it is increasing, which is a good sign. All right, so with that, let's get into the actual stock price valuation. So scrolling down just a little bit more. So over here we can see the discounted cash flow right here in this light green, doing the math. And down here, intrinsic value, just under $100. Taking into account a margin of safety is 65%. So looking at about a $65 range. And when I bought into it, it was, I believe, just under $47. So this was a good stock at the time to buy back in April of last year. And I can tell one thing though, my margin of safety is 65%. So they probably have a little more debt than I like to see, but nothing too crazy. For my intrinsic value, I am using a short-term growth rate of 10%, but we can see the CAGR for net income during the past 10 years is actually just over 25%. So I don't like going too high with my growth rate. I like being a lot more conservative, especially when it's high. Typically I wouldn't go over 15%, so I'm just using 10% to be a little more conservative. And then going a little further down here, my growth rate, which is based on these 5 data points here. We're seeing 10% over year or past year over year, 5 years, 10 years for book value growth, earnings per share growth, and sales growth. So this is a good value I'm seeing here with a B minus. Long-term debt to free cash flow, a little higher than I would like to see. I like to see under 3%, but not too bad. But I would like that to go down a little bit. Dividends, as we saw, nicely increasing. So right here, increased 220%. Share count decline, as we mentioned a few moments ago, just over 33%. And then these profit margins, kind of borderline. I like to see them at 10 or just over 10, but still, we see the last 3 years, 9.4. So getting close to 10%. So, this jumped out to me when I first did evaluation last year. I felt this was a great opportunity at the time. Like I said, I bought in around $47, and I was probably valuing the company back then probably in the $50 to $60 range. This is based on uh, last year's financials, so it's a little higher at about $65. So, great opportunity at that time. Now, probably, well, it is overvalued. I believe it's trading around $80. So, right now, I'm holding on to it, but we'll look into that a little bit more when we get into the uh, computer modeling and forecasting in a couple of minutes. But first, before we get into the computer modeling, let's just look at the trailing 12 months and use that instead of the most recent fiscal year. I'm going to change that to a zero. We'll see this all get readjusted. So using the trailing 12 months and the prior financial data, we can see here the intrinsic value jumps. And with a margin of safety of 75%, comes to $123. So just out of curiosity, if you raise that margin of safety to match what we had previously, 65%, no, that gets dropped to $106. I do know the most recent quarter they beat expectations. They had a very good quarter, so that's part of the reason why this is jumping up. So, one of my concerns is moving forward. Can they sustain that for the next 2 quarters? But let's go over to the computer modeling so we can kind of get an idea of what the outlook is and make a judgment call on how long we can consider holding this. So in the weakest software, we can see I ran the two methods for modeling the forecasted stock price using the M5 rule and ran the forest. So right now looking at the M5 rule, and this is as of August 28th when the stock closed at 83.83 and the S&P ETF closed at 442.76. Other columns here, just other financial data points for Toll Brothers. And scrolling down, looking out 52 weeks, we can see here of August 26th of next year, it's projecting a stock price at $78.87. So slightly lower than where we are right now. And moving over the random forest, which is usually a little more bearish. Same thing, looking out 52 weeks, it's showing a stock price of just over $55. So a significant decline here than where we are now. But if you see my other videos, I like to take the average. So let's take this information, we'll put it in Excel, and we'll graph it out to get a better idea of the outlook. Back over in Excel, you can see I already pasted the results for the M5 rule and random forest that we got from the Weka software. And going to jump over to the graph tab where we're going to take the average of those forecasted outlooks here. So the vertical red line, everything to the left in blue, that's a historical stock price, and everything to the right in blue is the forecasted stock price, looking out 52 weeks. The orange line is just the percentage change for the stock price movement. And as we saw in Weaker, it's going to show a decline, and taking the average of the two methods, it's showing a decline of about 13% over the next year. And this is a cyclical stock or industry, home builders. We can kind of see here over the 10 years, the stock has gone through these peaks and valleys. So back here in 2017, it had a nice bull run where it hit just over $50, and then it dropped over the next year or so, going back down to under 30, and then taking another bull run. Then it hit COVID, a significant drop, and then over the past couple years or 2 years since COVID, Had a nice run leading up to 2021, and then it dropped. This is about the time I bought in here. I believe it was April of 21, and it had another nice bull run, and now it's declining again. So I know when we did the valuation, I used the trailing 12 months. It jumped the valuation up to about $100, $106. But that was only based on the first 2 quarters of 2023. So not sure on how the next 2 quarters are going to look. So right now, still questioning if I should hold or consider selling if this is going to continue falling. And if we drop in the forecasted S&P 500 stock movement for the next 2 years, we'll just compare the two here. So the yellow line is the S&P 500. Same thing, everything to the left of that vertical red line is the historical. Everything to the right is the forecasted. And the green is the percent change for the S&P 500. So I'm going to turn this into a log scale. Should make it a little easier to see. Using the log scale, we can see here, looking at the green and orange lines for the percent change. So the green for the S&P 500 showing a much better forecast. Though it's down, is not down nearly as much as the Toll Brothers forecast, and it actually looks like Toll Brothers is more than double decline than what the outlook is for the S&P 500. So something I need to consider. Maybe holding the stock for another couple more months till at least maybe the next financial or next quarterly results. But something I'm going to look closely to see what I want to do with this stock right now. Not sure I want to hold it for another year or longer. Really considering selling it over the next couple of months. Hope you enjoyed the video and got some useful information, and I will see you next time.